You know, as my great-grandpappy once said, Poppy, you actually can only buy a house with 20% down. Make sure you get pre-qualified, and you have to have impeccable credit.
I'm tired of this, Grandpa.
That's too damn bad!
Now, I love Poppy very much, but nonetheless, you are wrong, old man.
False.
We are going to unpack the 3 most common myths of home purchasing. But before we get into that, I'm Andrew Russell, owner and founder of RCG Mortgage, winner of NAMBY Mortgage Broker of the Year for the Northeast, Scotsman Guide top originator. Make sure, guys, you like and subscribe to our channel. The more subscribers, the more content we pump out like hotcakes. All right? I'm excited to get into it. The 3 most common myths when buying a house. Myth number 1, you have to put down 20% when you purchase a home. Somewhere in a land far away, someone once said 20% down, 20% equity is a very good, safe number. You know, they say like 50 is the new 40 right now, right? 5% is the new 20%. So it is super popular right now, especially where the rates lie, to leverage the house equity, meaning to be house poor, cash rich, instead of house rich, cash poor, meaning more often than not, people are putting less than 20% down, taking those funds, putting them into the market, putting those funds in something that'll get them more than 4, 5, 6% as a rate of return. It's super popular, but somewhere someone did once say 20% down for whatever reason is what everyone has always shopped for. But right now with FHA loans, minimum down payment of 3.5%, even the opportunity of financing at 3.5% or getting a grant or a gift. VA loans, VA loans putting 0 down for veterans, which is amazing. Conventional loans putting as little as 3% down. They have stormed the marketplace. They're definitely the new norm. Number 2, getting pre-qualified versus pre-approved. Just get pre-qualified, right? What's the big deal? It's actually a huge deal. So what is the difference? Let's unpack it a little bit. When you go to purchase a house, when a mortgage professional vets your, various qualifications, what do we look at? We look at your credit, we look at your income, and we look at your asset profile. So what's a pre-qualification? No good, no bueno, whatever other language you want to say it in, do not get a pre-qualification versus a pre-approval. A pre-qualification is typically a phone conversation, like an I swear, right? Unfortunately, borrowers, clients, they don't really know if they're saying the right thing or they're not communicating the right thing. Maybe that person on the phone just runs their credit, doesn't review their income, doesn't review their assets or talk through it, and they get a pre-qualification letter. Unfortunately, a pre-qualification letter is no good because there's more of an extensive review that is done in the current climate in mortgage. So what's the difference between a pre-qualification, which again is a phone conversation and maybe a credit pull and that's it? A pre-approval, the mortgage professional will do their due diligence. They will run your credit, request various income documents. What does that look like? Pay stubs, tax returns, W-2s, all sorts of cool stuff. And of course, your asset profile, typically 2 months. They're gonna look for large deposits. There's a lot more questions, a lot more intrusive, more granular review that's done. But a pre-approval, if done by a mortgage professional, far exceeds complete 180 versus a pre-qualification. Just understand, guys, there are statistics that over half of pre-approvals, not even pre-qualifications, over half of pre-approvals done across America by loan officers have either a mistake that's a flaw that will prevent people from closing or something that will have to be remedied more downstream. So it just goes to show, make sure when you're buying a house or getting a pre-approval, you go to a mortgage professional that really has experience and knows what they're doing.
You think we need one more? You think we need one more? All right, we'll get one more.
And number 3, you need perfect credit to buy a house. Absolutely incorrect. Let's unpack that a little bit. The new rage right now is like, hey, show me your credit karma, bro. Show me what your credit score is.
F-R-E-E, that spells free. Creditreport.com, baby.
700, 800, whatever it is. It's a great time right now for the consumer because there's so many different apps and different ways to see what your credit score is. So there's, hyper knowledge out there of what your credit profile looks like. People may have the number 6 as the first number, or the number 5, and they kind of get down in the dumps. Womp womp, I don't think I can buy. It's actually untrue. You can actually purchase. Right now, great news, the government seems to be subsidizing mortgage rates and closing costs for the lower credit score clients. There's been some articles out that people with a 620 to a low 700, high 600 credit score range, the interest rate or the closing costs have been subsidized by the government, by Fannie Mae, by Freddie Mac to be a lot less. So it's a great time to buy, even if your first number on your credit score is not a 7 or an 8. Now, of course, here comes FHA, VA, government-backed loans. You can actually buy a house with an FHA mortgage, getting a score of 580 or above with 3.5% down. Literally, you can have a 592 credit score and buy a house with only 3.5% down. It's phenomenal. But the point is, guys, the mortgage professional is everything. There are so many options out there. Education is key. Just make sure you don't have any assumptions, right? You know what happens when you assume. Just reach out to a great mortgage professional. There's some great options, even if your score is under a 7 or 800. Sorry, Poppy, not trying to drop the dime on you. Daniel Russell, my grandfather, I named my first kid after you. Unfortunately, those 3 myths, and we've debunked them. They're incorrect. If you guys have any other myths, anything else you want to talk through, make sure you comment below. We at RCG here, we're big believers, we're big proponents in education for the mortgage space. Make sure, guys, you like, comment, and subscribe below. The more subscribers we get, the more of this lit content we get to push out. I always need a cheap plug for the word lit, of course. But thanks so much, guys, for tuning in. Until next time, we'll see you then.